In this video today, I'm going to be talking about how you can save money on your taxes and use that money to build wealth. Hey, this is Alex, host of Black Wealthy and Wise, the #1 podcast for helping families create more freedom so they can live their best life and create a legacy for your family. If that's something that interests you, please consider liking and subscribing to this channel. So, hey guys, I know you've probably hear a lot about wealthy billionaires like Jeff Bezos and Elon Musk and all these people who get a chance to write off all their money on their taxes, right? Well, I want to share with you a little bit today of these are some of the same things that you can actually do for yourself and legally reduce your tax liability. So let me just first say the information I'm going to share with you is for information and educational purposes only. I am not a accountant or a tax advisor, so please consult your tax professional. If you want to have half a chance of being able to create financial freedom for yourself and for your family, or being able to build wealth, the tax game, you have got to absolutely play it. There's no two ways about it. Why am I saying that? The amount of taxes that you pay is probably your number one or number two largest expense between federal taxes, state taxes, property taxes, and sales taxes. If you were to take all of those taxes and add them up over your lifetime, more than likely it's going to be number one or number two largest expense. So, if in fact you want to be able to save money, the smart thing to do is to look at the big areas. You're more likely to find an opportunity to save money in those areas than worrying about trying to cut off Netflix or trying to reduce your cell phone bill. So, did you know taxes haven't always been around? The tax structure that we see today, it was actually created around 1913. And let me tell you how it happened. J.P. Morgan and his buddies got together on Jekyll Island in Georgia back in the early 1900s. And they schemed and devised and figured out a way that they were going to be able to come to become the bank for the entire country. What they came up with was a bank actually called the Federal Reserve. Yes, that's right, the Federal Reserve. Now, many of us might think the Federal Reserve is a governmental agency. It is not. It is a collection of private banks that actually have the charter and the responsibility of actually putting money into the banking system. Yep, that's right. So these days, when you see people talking a lot about inflation or they're talking about interest rates going back up, that's what they're talking about. They're actually talking about these private collection of banks called the Fed or the Federal Reserve. They are actually charging the entire country an interest rate to put money into the banking system. You might be wondering, or they were wondering, hey, if we're going to be putting money into the system and we're actually going to be charging an interest rate for it, who's going to pay it? Well, guess what? You are. It is set up where the Federal Reserve would actually put money into the system, right? And then the IRS, which was also created around the same time, would be responsible for generating revenues, for getting tax revenues from us, the workers. Yep, that's right. So many of the tax codes, they've changed many, many times since the 1913s. But the whole idea is the system is set up for the workers' income to be taxed, for their purchases to be taxed, for items that are sold and commerce that happens is to be taxed. All in order to generate income for the IRS, in order that the IRS may have money or the country may have money, one, to operate with, and then number two, to pay the Federal Reserve back on the money that they actually put into the banking system. So now, hey, you know exactly how this all came about. All right. So now that we know it was actually set up for the workers, the people who are actually producing things in this country, now that we know it was designed, the system was designed for the workers to actually pay more in taxes, now you understand a little bit more of why it's important that you begin to understand tax laws, right? I'm not asking you to become a tax accountant. I'm asking you to start learning about some of the ways that you can legally reduce your tax liability. Now, I know sometimes people have this clever idea that they're not going to report all of the income. There's a fine line between tax avoidance and tax evasion. Tax avoidance is when you use legally the tax laws, right, in order to reduce your tax liability. Tax evasion is when you're actually hiding income or you are illegally increasing your expenses and deductions, right? Fraudulently, right? So that you are able to reduce your tax liability. So, one way is when you're legally using the tax laws versus illegally using the tax laws. Big difference. One gets you locked up, and the other one, hey, you're sitting home looking pretty. All right. Let's talk a little bit about okay, which workers are we actually talking about? So Robert Kiyosaki said that there are like four quadrants, right? So we have employees, we have people who are self-employed, we have business owners, and then we have investors. And here is why I say it is critical that you start understanding tax. Because if you are someone who gets a check, if you are an employee, guess what? You are actually paying the highest tax rate on your earned income. So the tax law is written so that people who are self employed, people who have bought themselves a job, can now start to begin to write off some of their operating expenses, right? They can write some of those expenses off, and then they can begin to pay taxes on the adjusted amount after standard deduction, after exemptions, and other things. As opposed to if you are an employee, guess what? Uncle Sam is hitting you guys right on the head before you actually get your check yourself. They've already stuck their hand in there and gotten their portion out before you even get your check. As a self employed person, you can begin to write off some of your business expenses along with your standard deductions, and you can adjust the amount of income that you have and the amount of income that you pay tax on. Now, if you are a business owner, now you're going to have many more expenses. You're likely to have people who are employees of your own. You're able to write off the expenses associated with your employees, general salaries, administrative general expenses. You're able to write off many more expenses as a business owner. And then finally, as an investor, investors, that's really where you want to be. Why? Because investors have actually the best tax favorability. Okay. They're going to pay the least amount on their taxes, on their taxable income that's related to investments. And I'm going to share with you in a minute how they're going to pay the least amount. So you want to make sure that you begin to, if you are an employee, you want to make sure you begin to leverage and use being self employed or a business owner or an investor to try to reduce your tax liability. You might be saying, hey, Alex, I get a tax refund at the end of the year. Let me just share with you why you absolutely do not want to get a tax refund. That means throughout the year, you have actually paid more in taxes, state or federal taxes throughout the year than you are required. So the government now is in a position where they are to give you a refund. When you file your taxes, they're not going to give you any interest on that money. They've used that money the entire year, entire year. And once you finally do get your refund check, it's going to be just that amount. It's not going to be interest on that amount. And so one of the reasons why it's really an interest-free loan to the government, and you don't want to make interest-free loans to anybody. And then secondly, if you are not getting the full amount that you due throughout the year, or if you were getting the full amount throughout the year, that means that you have just that much more money that you can use for your purposes, investment purpose, savings purposes, putting it in other businesses, putting it in other assets so it can be growing and working for you. This is more, this is your money and you are entitled to it. And so you want to make sure that you get everything that you're entitled to throughout the year instead of waiting until the end of the year to have a tax refund. Now, if you feel like, you know what, it's kind of a forced savings account, I'm going to share with you there's some other ways to do this. And if you look at it as this is a forced savings account, and then once you finally do get your refund, you're turning around and you're just going to spend it on stuff anyway, this is not how you want to build wealth. Now, let me share with you a few ways that you can legally reduce the amount of taxes you pay, and you can use those savings to build wealth. So, first of all, number one, the first thing I recommend you do is make sure you get a CPA or someone who is or a tax accountant, someone who understands taxes like the back of the hand. And the reason why you want to do this is because you want to make sure that you have someone who fully understands how to help you and advise you on fully taking advantage of the tax code. You also want to make sure that you are talking with this person before you make a purchase so you can understand what's going to be the best way for you to make a purchase or sell something, whatever it is that you're trying to do. You want to make sure you talk to a tax professional so they can tell you what's going to be the best way to do it so you can reduce your taxes or don't pay taxes in the process. You want to have a tax professional who is working with you before you make purchases or sales, right? Instead of waiting till it's already done and you're filing taxes at the end of the year, it's too late at that point, right? So you want to make sure you have a tax professional on your side, someone who can tell you exactly how to set things up so you're able to get the maximum tax benefit. Number two, if you got a refund, okay, if you're getting refunds every year, I highly recommend that you go to your HR department, right? And you change your W-4 forms. This is the form that you use to change the number of exemptions, okay? And this tells your employer how much of your income to withhold for federal and state taxes. So you want to be in a position where you are breaking even with the government. They don't owe you and you don't owe them. So that's the reason why working with a tax professional or someone who can help advise you so you can know exactly how to fill out the form so you break even at the end of the year and you get the maximum amount in your check each and every week or month. Number three, you want to make sure that you are taking full advantage of your company's 401k program. 401k program is a retirement savings program where you put part of your income, part of your salary into their account, retirement, their 401k account, and that money is going to be able to grow over time in order to help you have a nice retirement once you get to retirement age. Now, the reason why you want to make sure that you're taking advantage of the 401k is all of the contributions you make throughout the year are tax deductible. That's right, they're tax deductible. So you can actually contribute up to $6,000 if you're less than 50 years old. If you're great older than 50, you're able to contribute up to $7,000, and you can write that off on your taxes for the given year that you contribute that income. Now, number four, IRA. IRA is individual retirement accounts. They are very similar to the 401k program, except it is set up by an individual, by you. Okay. So this is an account where all the contributions you make to the IRA are considered tax deductible. So everything you contribute, you can write off on your taxes up to $6,000. If you're over 50, you can contribute up to $7,000. So these contributions you're able to write off on your taxes, which helps you to lower your tax your tax liability throughout the year. So this becomes a great way for you to lower your taxes now, and you're actually able to save money for your retirement into the future. Number five, you may be wondering, well, Alex, I'm self employed, I'm a business owner. What about me? Well, guess what? The SEP IRA is actually a tax advantage account that you can set up for yourself as a self employed person or business owner. So all of the monies that's contributed to this account will actually be tax deferred, meaning you can write them off your taxes. All the gains will also be tax deferred. And then once you reach retirement age at 59 and a half or older, you're able to access those funds without penalty. And then at that point, you pay taxes on the money that you withdraw. The good thing about a SEP IRA is you can actually contribute up to $19,500. Okay. If you have higher income, you're now able to write off more of the contributions you make to your SEP IRA as a self employed person or as a business owner. Number six, everyone under the sound of my voice needs a home based business. You need to set up a place within your home where you are operating a home based business. What is a home based business? The IRS says it is a business. It could be similar to a hobby. It could be a hobby, but you are in pursuit of a profit. As long as you are in pursuit of a profit, it is considered a business. Okay. And you want to make sure that you have an area set up in your home that you can, that's considered your home office. That allows you to write off expenses that you're already paying for in your home anyway. Now you can write off rent, mortgage, light, gas, water. You can write off homeowners insurance. You can write off a portion of your car, internet, all of those things that you would normally be using in the operation of your business, purchases of your cell phone, computer, right? So these are all things that you normally would be using within your business. You're able to write off a portion of the expenses that you spend every single month to operate your home. Now you get a chance to write these things off when you operate a home-based business. You can have as much as 300 square feet. That's the limit, and you can write off whatever. Say, for instance, you had a 3,000 square foot home, and your business was 300 square feet. Well, that's 10%, right? So now you get a chance to write off 10% of the expenses associated with your home. Number seven. When you are making investments, okay, you want to make sure that you are holding on to your investments at least 1 year and a day. Why am I saying that? If you're buying stocks and crypto, you want to make sure that you hold on to these investments long term, meaning 1 year and 1 day. So now, once you decide to sell those items, right? Now, the income that you have from the sale is only going to be taxed at 15%. 15%. This is where you're actually able to save a lot of money in taxes when most of your income comes from investments or capital gains. Capital gains is what you actually is what's considered when you buy something and you sell it for more. That difference is called capital gains. And you're only taxed 15% when you keep it longer than a year and a day. All right. So if you happen to be someone who is trading stocks, trading crypto, and things like that, understand that when you are buying and selling, you're trying to buy low and sell high. You're trying to sell these options. You're trying to time the market so you can try to get as much as you possibly can out of the sale. Understand that it's going to create a taxable event for you. And those taxable events are going to be taxed at your ordinary tax rate. So that's the reason why if you are a trader, you're going to pay more in taxes. If you are someone who is a long-term investor, meaning they buy stocks, they buy crypto, and they keep it for longer than a year and a day, then you're going to pay up to 15%, no more than 15% on your capital gains. So that's the reason why it's important to be a long-term investor than a trader. And then finally, number 8, there's this little thing called the 7702. 401k isn't a particular account. 401k is actually a tax code. Well, guess what? There's another tax code, 7702 tax code. It relates to life insurance. And many people don't understand and don't know that cash value life insurance is one of the best ways for you to shield your gains as well as your withdrawals or income from taxes. Most people don't understand that. Did you know when you have a properly structured life insurance, number one, your death benefit is going to be tax free? It is tax free. When you also have a special account set up, you can actually get tax free income in retirement that never runs out. What else can you get? If you happen to need monies to buy real estate, to buy a business, to send a child to college, for whatever reason, you can actually get access to this money without penalty, okay, without taxes before you reach 59 and a half. Unlike your 401k or your IRAs, you don't have those same stipulations and those same penalties. And if you remember, I talked about there being a limit to how much money you can actually put into these 401k, your IRA, and your SEP plans. Well, guess what? When you have a properly structured cash value life insurance policy that fully takes advantage of 7702, guess what? There is no limit. You can put as much money as you want in these accounts. They're going to grow tax deferred, okay? They're going to grow tax free. You're going to be able to access them tax free. It's going to grow without you having to worry about losing money in the stock market, and it's going to grow compounded. This money can be used for any purpose that you want without penalty before you reach the age of 59 and a half. And you can possibly pull that money out and have a tax free retirement income that never runs out. So it is definitely something to take a look at. If you want to know more about having a cash value life insurance policy that's structured just the right way to help you reduce your taxes and build wealth long term, definitely give me a call, inbox me. I love to show you the benefits and how to use this to build wealth and to reduce your taxes. There you have it, guys. These are the 8 ways that you can actually utilize all these various forms legally, how you can use these various accounts and business structures in order to save money on your taxes, have more money that you can use, right, to enjoy in life, or for you to be able to use to build up your wealth long term. So, as always, if you have any questions or comments, I'd love to help. Feel free to email me or inbox me or comment below. All right. Take care. God bless. I'll see you on the next episode.